Hello everyone, I'm Stephanie Banner. Welcome to my July market report. Things are changing so rapidly in our country, it's hard to follow all the twists and turns in the market. But you've come to the right place. I have some answers for you. Where I want to start today with this monthly market report is the unemployment report. The consensus among experts was that just over 3 million jobs would be added in June, but 4.8 million jobs were actually added. Almost 50% more jobs coming back to the market after we saw the months prior losing jobs. Last month, we gained jobs. This is more than we've gained in the history of unemployment reports, and I talked about that in my June market video. We know that in the service industry, 2.1 million jobs were added in that category, 740,000 in retail. People are feeling comfortable going out and shopping, and we're seeing those jobs coming back. I know if I have a mask on, I have zero hesitation about going into a store. You can see down the line here in this graph, education and health services, doctor's offices, manufacturing and professional services, many jobs coming back where there had temporarily been unemployment situations. And as they could come back safely, they are able to. As the Bureau of Labor Statistics reported, we ended up in June with 11.1% unemployment. The story really here is that unemployment went up in March and April and has come down in May and June. And as we break down this 11.1% unemployment, it's important to remember that as 11.1% of the people are unemployed, that still means 88.9, almost 89% of those out there in the world are employed. 9 out of 10 almost that have a job. Probably one of the biggest shifts in this unemployment report is the number of people that are now reporting that this is a permanent unemployment versus temporary. Reflective certainly of businesses that are saying, hey, this is going to affect us more than what we thought originally, and we're seeing that number grow there. I think the Wall Street Journal summed this up probably best when they said, U.S. job growth surged last month, underscoring the economy's capacity for a quick rebound. If businesses continue to reopen, consumers regain confidence. They go on to say, a recent coronavirus spike, however, could undermine the trends captured in the latest job reports. And in California, we've seen a surge in cases. One of my good friends has come down with the virus and is slowly recovering. And this is the first time I've seen it personally, so that's been sobering. So what effect is this recent surge in the coronavirus going to have on the economy? I'm going to stay on top of that and continue to watch that. As far as unemployment goes, we're seeing temporary unemployment drop, but permanent job loss keeps rising. In this case, we're talking about a core unemployment rate, which subtracts temporary layoffs and adds the unemployed who didn't search for a job recently. And that number jumped to 5.9% in June from 5.0% in May, according to Indeed economist Jed Kolko. As we see the overall unemployment rate falling right now, core unemployment has grown from May to June and certainly from April to May. Now, we're going to continue to watch this. If you want to compare that back to April 2010, here on the left in the orange color, we know we're at about half of where core unemployment was back then. And as we start to look at this, it brings up a lot of questions. How is unemployment going to affect the overall economy? How is it going to affect our home appreciation? Are we about to see a wave of foreclosures? Let's try to answer some of these questions and how this is different from 2008. Black Knight, a data and analytics company that provides info for mortgage and home equity lending and servicing companies, brings some very good information here. They've studied all of the active forbearances, meaning those that have paused their mortgage payments due to financial hardships and unemployment. Things like that. So of all the active forbearances which are past due on their mortgage payments, 77% have at least 20% equity in their home. If you look at this graph, you can play that out and see that 90% have at least 10% equity in their home. What does that mean? They summarize in the report that high level of equity today provides options for homeowners, policymakers, mortgage investors, and servicers in helping to avoid downstream foreclosure activity and default-related losses. Think about it. If you had a $400,000 home and you were in a situation where you couldn't make the payment and you had 20% equity in that home, that's $80,000. You would go out and sell that home before you'd allow it to go into foreclosure. I think applying that common sense to that equation is what we have to do today and back it up by data. But unemployment's a story I'm going to continue to watch. Lending Tree says 87% of home sellers are concerned their home won't sell because of the pandemic and resulting economic recession. That's a big number. A lot of home sellers are saying, look, I'm concerned about what's going on and I'm afraid that my home won't sell. And yet 372,000 homes were sold in the US last month. The number of people that are looking for homes and buying homes today remains extremely strong. I can tell you on my end, when my clients and I make an offer on a home, there's usually a few other offers we're competing with. And this is in the $800,000 and up category. The days a home stays on the market before it's sold in OC is still on average 20 days. So what do we see? We see the housing market starting a recovery. We know people are going out and looking at homes. As we add in Zillow's information here that newly pending sales are up 18.8% month over month, and listings taken are up 5.2% month over month. But here's the interesting thing, total listings are down year over year, a little over 20%, and new listings taken are down 16.6% year over year. So as there's activity coming back in the market, there just isn't the available inventory in the market for those that want to buy. There's less than 250 homes for sale in San Clemente currently, down a little from last month. There's a similar amount in Dana Point, 237. So we know the demand for homes is strong. Mark Fleming at First American sums it up best this way. He says, as we navigate the unprecedented impact of COVID-19, home has taken added significance. And there are signs that homeownership remains one of the main tenets of the American dream. Even if we look at showing times, people continue to get back out there and look at homes, whether in person or virtually, depending on where they're at. As we saw this spike up in the months after we bottomed out in April, this upward trend and continuation of showings and people saying, hey, we want to go out and we want to look for a home remains strong. So really, this is being driven by supply, inventory, and demand on the other side. The number of people coming out that want to buy homes. I think this is summed up very well by Ivy Zellman in their broker report. Ms. Zellman is a housing expert and CEO of a housing research consultancy and investment banking firm. She says, the severity of inventory tightness should remain a relative benefit to home prices, so that upward pressure on pricing. But it's also a risk factor to the degree of rebound in unit sales going forward. So inventory literally being the lid of what we can go out and effectively rebound in the housing market because there isn't an available number of homes to sell there. We know that lack of supply is keeping upward pressure on prices. So if you're watching to hear this, thank you. I would love to buy you a coffee as a gesture of thanks. And honestly, you deserve it for listening to me for this long. So give me a call. If the dream of home ownership or investment is still one you're having, let's make it a reality for you.